Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be sharing with you a video that I did for the private members here on Friday. So we've only had the weekend in between, but the majority of the video that I shared with the private members had a lot of very useful information which I thought would be incredibly important and relevant and would add a lot of value to the general subscribers here. So I'm going to play part of that video as it's still relevant after the weekend. And in that video I was covering the main theme, and that is, as per the title of this video, which is that Bitcoin has made a same candle pattern at the top of every single bull market, and it's something that everybody should be aware of, as I've never seen anybody cover this particular pattern for each of the cycles. I'll also be having a look at the wider markets to have a look at exactly how they're playing out and how they're going to be influencing Bitcoin going forward. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So I'm going to play you this video from Friday, which I produced for the private members, looking at a certain candle pattern that has played out in a 100% accurate way. Now, it is a candlestick pattern that plays out regularly, because then you'd be looking at the tops even well before the actual top. But it's something that we should just be aware of in terms of when we do get to the top, what we can expect. The question is, what am I looking for in terms of a topping out pattern? Of course, most of the patterns tend to be either head and shoulders patterns or double tops or triple tops. Those are your classic bull market patterns at the end of a bull market. But once we get there, there's a certain candlestick pattern that seems to be playing out, and that is, and it's this one here, the bearish engulfing pattern. So it's the outside bar bearish engulfing pattern. So you get a uptrend here like this, and at the top then you get this two candlestick pattern set up, whereby the body of the candle here is engulfed by the open and close of the next candle. This is the outside bar bearish engulfing candle, and then you can see what happens afterwards. So this is the thing to look out for, and it's based on the weekly time frame. So this is the first cycle back in 2013. This was our uptrend all the way up to here, and then you can see that this candle was engulfed by the next candle, and this was really the start of the bear market here, although it gave you a slight double top as well. So these are obviously something to be mindful of, but this was the start of it, the outside bar bearish engulfing candle. Now this is the top in 2017, 4 years later, at the end of the next 4-year cycle. Once again, we got a rising trend as per normal, and then we got this candle here at the top, which itself doesn't tell you that it's the top because you're getting all these rising candles, but it's the next one that's the most important. We get a red candle which engulfs the previous candle. So once again we have an outside bar bearish engulfing candle, and then this happens one more time. And this was the double top that we got in 2021, but on both of the tops we got the same candlestick pattern, and this was the top candle here, but look at the previous candle. So we had this run up as per normal, then we got this at the top of that trend, and then that was followed by a outside bar bearish engulfing candle, and after that we got this. So that was the first top, and in the second top exactly the same. We got this big trend, and the top candle was this one here. It was followed by another outside bar bearish engulfing candle, and then we got the start of the bear market. What we've got now currently, where we are, I'm not saying that we've topped out, because these outside bar engulfing candles do play out all over the place. So therefore we need other factors, other indicators that tell us that we're coming to the final top of this 4-year cycle. So what I mean by that is that you can see these outside bar candles everywhere, like this one here at the top of a trend. You get this green candle here, and it's engulfed by the next one, but it doesn't play out, and it's not the top. And then you get another one here, again at the top of a trend, and this plays to the downside, but of course that wasn't the top. So I just want to point that out, that what's happened here and here is also happening here. But to be able to identify the actual top of the bull market, we need more than just this. But it is a pattern that seems to be common to every single top that we've had so far. So the pattern itself doesn't indicate the top, but it is something that occurs at the top, if you can understand what I'm saying there. So you can see quite clearly here the recent tops that we had were also characteristic of the two candlestick setup. So we got this trend here, then we got this candle, and then it was followed by an outside bar bearish engulfing candle, and we never closed above that candle. And then when we had the second top here at 109,000, similar thing happened. This candle was engulfed by the next candle one more time, and so far this is what's happening to our chart pattern. Now the reason why I'm showing you this is that firstly we need to identify the types of things that can happen at the tops. So even if we do go up here and go to make all-time highs, whatever this is going to be, so if we do get here, this is the kind of thing we have to look out for, because this is what's happened repeatedly in every single cycle so far. But the second reason I'm saying this is that we need to be just aware of this particular setup here, because when we look at the 60-day cycle, because of the way the 60-day cycles work, there's certain factors that we need to keep in mind, because if they play out in a certain way, then we could well be faced with a bigger correction here, and that may then be something that identifies this as the actual top. So I'm not saying that is the top. A certain thing that happens down here may well be the trigger for the thinking that this could well be the top here, because it's something that shouldn't happen at this point. But again, it's useful to have the knowledge of identifying these patterns. So what am I talking about? Well, let's have a look at the 60-day cycle first of all, to give us some sort of an idea what I mean by not breaking this low here. Okay, so my understanding of these 60-day cycles is that when you're in the euphoric phase of a bull market, you shouldn't really be having a failed cycle. What we're really expecting in the next coming months, that we should be getting mostly a right translated cycle. But that doesn't mean that you can't have a failed cycle in the euphoric phase, because the euphoric phase could last around about 12 months. And in those 12 months, that gives you 6 cycles. And you wouldn't expect 6 right translated cycles. So amongst them, you might get 1 left translated cycle. And that's absolutely fine. But because of what's happened recently with the macro situation and the way these patterns have developed at the top of this particular trend that we got here to the 109,000, then we have to tinker our thinking in a certain way, and just as a defensive posture to protect our funds being whittled away like this. So we have to adjust our thinking according to how the situation seems to be playing out, however unexpected it is. So if you look at the 60-day cycle here, so if we start from this point, the red line here was the start of this new cycle there, and we went into the midpoint, made a high here, then after the midpoint we made another high here. So this was a right translated cycle. Then this was followed by this particular cycle which started on the red vertical line here. Once again into the midpoint we made a high of 109,000, but after the midpoint this was the high that we made, and this was a left translated cycle. So if we consider that we're in the final 6 to 12 months of the bull market, we've already had a left translated cycle. And maybe this is the clue here. It would be unlikely, although not impossible, it would be unlikely to have 2 left translated cycles. So this is going to give us a clue here as what the market is about to do. So now what's happened is that we've obviously started our new cycle here on the 28th of February, and we're going into the midpoint here. So this is really going to be very critical as far as I can see, and only time will tell if it plays out like this. But as we go into the midpoint here, we have to expect some sort of a mid-cycle decline wherever we get to. Let's say we get to this white trend line at this point, and then we have a decline to the tops of these candles here. Now what's going to be critical is if we go like this and we make a right translated cycle here. That would be a very good sign that we haven't topped out at this point, because you would expect a right translated cycle and for this to go much further. And if we can then consolidate in the upper range, then in the next cycle after the end of the current cycle at the end of April, then this is where we would challenge the 109 and hopefully get above it and continue with the bull market. Now what we really don't want to see, that having made the end of the previous cycle bottom here, we should not be now coming back to this particular point. Now we've already had a left translated cycle here, and we've had the macro situation which is telling us that there's something different going on. So the worry I would have is that if we get to this white trend line, which is currently at around about the 88, 89,000, where you would expect some sort of a pullback, and if this pullback, instead of going back up, comes back to retest this and closes below this point, this is something that should not be happening at this stage of the bull market. That would be a very worrying sign, and that would be a trigger where I would be wanting to take some defensive posture with the Bitcoin miners. So this is something very important to look out for. At the end of the day, everybody has to make up their own mind. Nobody knows the future. I'm just reading the charts in terms of the kinds of things that you would be looking for, the insight into how these play out and the situation that we find ourselves in. When you take everything into account as much as you can, then everybody has to make up their own mind where they believe the market is. And I'm just sharing with you my own thoughts that this particular bottom here that we got down to, the low of which was at 76,600, if we close below that point, then that would tell me, it doesn't have to happen, but the probability that if we close below this is that we're going to go to much lower levels here. And this is where I would be wanting to take a defensive posture. So I hope that's clear. I don't want to be alarming people that we've topped out here. I am trying to be very careful not to give the impression that I'm thinking that we've topped here. Now, if we have, that's a different matter. But there are other considerations that what happens down here now is going to give us some sort of a clue whether this has topped out or not. And at the moment, you can't confirm that, but breaking below these would give you a little bit more of an added confirmation that we may well have topped out here. Now, people ask about the Bexit indicators. Well, the Bexit indicators are historical signals which have played out in the first, second and the third cycles. So that is not a guarantee that they're going to play out in the fourth cycle, which is the current cycle we're in. Because as we've seen with so many other factors, that this cycle seems to be playing out in a slightly different way. And it may well be that those Bexit indicators will play out a little bit later, and that this cycle may end up being an extended cycle. So instead of ending at the end of 2025, it may extend into 2026, at which point then those Bexit indicators will then be triggered off. But in the meanwhile, we have decisions to make here and to keep our focus on exactly what's happening with the market. So I hope that's clear. It's something that we need to be aware of. The main thing is not to close below 76,600 because then lower figures then come into view. Okay, so while we're on this particular chart, we can have a look at exactly what's happened to where the price came up to. So in the last few videos, I marked up these targets here that if you take it from the previous high to the low at 76,000, then your 61.8 comes to this white box here. So if you've been watching my videos, you'll know that this was our first target of 87,000. So yesterday it came up to 87,400 and then we got this red rejection here. So this is what's happened so far. Our first target has been met, and it is quite common that at the 61.8 you will get a lot of people taking profits. So you get red candles at the 61.8 very often. So nothing untoward about that. What we need to do is to maybe consolidate for a few days here and then go to the next target, which is the 78.6 Fibonacci level, and that's at 90,000. Then on the right hand side, these are our larger targets that we're hoping Bitcoin will meet within the current 60-day cycle, which ends at the end of April. And the first one is the 50% here, which is at 91,000, which is very similar to the 78.6 target here. But this is the big one here, the 61.8, and that 61.8 is measured from the 109,000 top to the bottom at 76,000. And this target is at 95 to 96,000. So if we get to that particular point, it'll be very interesting to see how the candles develop here. If we see topping out patterns at this point, that may well be a good place for those people who think we've topped out here. And my own belief is that we haven't topped out yet, or we don't have enough information, we don't have enough signs and indications that we have topped out here. So my belief is that we're going to go higher than this, somewhere along the line here. But if we do get to this point, and those people who believe that we may well have topped out, and you don't really want to be getting out at these points, you want to be getting into some sort of a counter trend rally and then looking at defensive positions, and then judging by how the candles are playing out, you will have a better information to take a defensive posture of taking out maybe 25% or 30% or 40%, even 50%, or whatever people feel comfortable with, and then let the market convince you whether it wants to go up here or whether it's going to go down. So let's see what happens. But we met the first target here at 87. The next target is at 90, and that should take us into the midpoint of this current 60-day cycle. So you would expect some sort of a correction either from where we are now or at the 90,000. And then it's what happens afterwards here. If it doesn't go up there and then starts coming back down, that would be concerning, especially if we get down to these levels here. It shouldn't be making a double bottom at this point. Another thing that I think we should be aware of, and which would give us some sort of a clue of where this price wants to go, if you look at the RSI here, so if I elongate this to give you a much clearer insight, if you take it from the 109,000 top over here, so if you do a trend line from here and put it through these points, at the moment what we've got is we've got rejected right at this trend line. What we really need to see is a break of this trend line, and that would give us a very good clue that this wants to go much higher. And obviously it correlates with this white trend line, which is the tops of the lower highs all along here. And we are coming to that point on the 5th go, and as we know, the more times the trend lines are tested, then they're more likely to break up. So the RSI seems to be again giving us another signal. We did try to get above it there, as you can see, but it failed because of this Fibonacci 61.8 rejection. Okay, so I hope you enjoyed that. A lot of useful information and gives you all the insights that I have currently at the moment. And what I want to do now is to look at the wider markets, how they're impacting on Bitcoin, especially the SPX, because this is incredibly important. But before I go into the SPX, I want to just cover the dollar, which has a lot of influence on what the markets are doing. And looking at the dollar on the daily time frame, what we've got here is that we had, at this moment, we actually talked about this level here at the 103 the previous week, and this is exactly where it came down to at the 103 as it was coming back down to these levels. And as we saw at the bottom here, what we're seeing is a reversal of the dollar, because what you've got on the RSI is a higher low and the dollar was making a lower low here. So you've got the bullish divergence that formed here. So we know that this is now got a little bit of a bounce to the upside. It may only come up to these levels here, which is about 104, which would now provide a lot of resistance as it comes up to that level. But of course it can go to these levels as well, around about the 105. So let's see how that works out. But if we have a look at the weekly chart, this is looking even more bullish for the dollar, simply because what you've got is you've got two bullish looking weekly candle closes here. And those bullish candle closes have got the long wicks at the bottom there. So they're basically a hammer candle, and one is quite powerful, but you've got two here. So the chances are, the probability is that this is going to play up to the upside. And this could go to even higher levels, around about the 106 mark. So let's see what happens. So the dollar is really setting the stage that there could be some weaknesses in the wider markets. But as we've also seen, sometimes the dollar does correlate with the wider market, especially with the gold. But before we have a look at gold, I want to really look at the SPX, because there's a lot of interesting developments going on. Okay, if we move on to the SPX on the daily time frame, what we've got is a certain pattern now developing, which we've got to be very careful of, and that is that from the start of the bull market at the end of 2022, we've been making a series of higher lows along the way. And this is obviously what you would expect in a bull market run. But when the market is topping out, you start seeing certain signs which are giving you weakness in the market that we may either have topped out or in the process of topping out. And that is that the previous higher lows suddenly get broken down and we end up with a lower low. And this is exactly what we've had in the last couple of weeks here. So this is giving you the first sign that either we've topped out here by making this very flat price action pattern here. As you can see, all the way through, we're having rising patterns at the tops, but suddenly it's now flattened out here. So either we've got one more leg to go for a higher high, or this is basically what we've got as the top, and that we're going to get some sort of a counter trend rally, which we would call a false rally, before this tops out and then starts moving to much lower levels. And if you lose this point now, that would be your confirmation that we're really in a bear market and we've actually topped out at this point here. And if we look closely over here in terms of the resistance and support, this is where we broke down at this point when we came down and closed on the 6th of March. So this was our first clue. And then we actually came down to below these levels, which has been marked by the yellow zone here. So once we came down to these levels, we needed really to come back and get above that. And we've been trying to do that for the last few days and still not managed to get above it. So you can see the weakness is still there. And of course, the previous low is marked by this green dotted line here. So this is what we've really got to aim for, around about the 57.73 mark. If we can get above there, that would be a good sign that we may well come back and retest this level. However, the levels that I would be really looking out for would be the 61.8, because you're more than likely going to get some sort of reversal, and that is going to be based on at 58.91 to 59.12. So anywhere around the 58, 59 level, if we start getting rejected at this point here, for those people who think that we may well have topped out here, and that's the end of the bull market as we know it for this cycle, then this would be your ideal spot to reduce positions, because if it starts to come back down to below the green line one more time, then the chances are it's going to also come back below the yellow zone as well. And then that really brings this into play, and the rejection of that would put you into a full-blown bear market. And that could last anywhere between 6 to 12 months. And of course, if the SPX is doing that, then the chances are Bitcoin may well have topped out as well at the 109,000, because they are quite strongly correlated with each other. So this is why we need to keep an eye on the SPX, that if the SPX starts to move back to the downside, then we may have some decisions to make with Bitcoin. And what's giving us a little bit of hope with the SPX is that on the weekly time frame, we printed this bullish hammer candle the previous week, and that was followed by an inside bar candle. So there may well be a momentum move back to the upside here. And if we have a look at the stochastic RSI, this seems to be looking like it wants to turn around back to the upside. So it's not all doom and gloom with the SPX. We may well be seeing at least some sort of a rally back towards higher levels. It may not get to the top here, but certainly there's a little bit more to go. But what we do need is a follow through now. But the even longer picture doesn't look great on this particular candlestick pattern, because what we've got on the monthly time frame with the SPX, something we must be noting is that we've got another bearish outside bar engulfing candle. And this usually forms an evening star pattern, which is a bearish pattern at the top of a trend. So once again, different time frames are giving a different picture. That's why we need to keep a focus on and make head or tail about exactly where it wants to go. But on the whole, I would say that the SPX is not looking great, and it's really going to take a very good macro picture developing before we see a turnaround here. And if we move on to gold, what we've got is that same pattern here, the outside bar, bearish engulfing candle at the top of a trend. So we know that on the daily time frame, we may have some form of consolidation ahead of us. This could actually form some sort of a bull flag before it starts powering ahead. So we haven't really come to a top yet here, or there hasn't been any sign of that, except that if you look at the RSI, what we're seeing is a bearish divergence, a higher high on the price and a lower high on the RSI. So there is some bearish pressures now starting to develop with gold. But obviously we know that these can carry on for quite a while, as you can see here. But certainly in the short term, we can expect some form of consolidation here. And on the weekly time frame, very similarly, but still powering ahead, you can see that it's still making the higher highs and the higher lows. So on the weekly time frame, there may be still some way to go. And again, we've got the bearish divergence one more time. So sooner or later, this is going to top out. And the monthly time frame is exactly the same. We've got the divergence here with the monthly time frame, but the candles are still very strong, so this could still carry on playing out for a few more months yet. And it seems to be defying all the logic that you would expect, that by now, and this is really defying any logic, because by now it should really have topped out. But this is what happens in the markets. They don't always play out according to what the indicators are telling you and what any logic is telling you in terms of how the price action is behaving. And just having a look at what's going on in the news, what we've got really here is that some analysts are thinking that Bitcoin may well be forming a bottom as the Fed is easing their stance in the market, as well as they're softening on the tariffs. So if this happens, then the chances are we could well still go and make a retest of the $109,000 mark for Bitcoin. So only time will tell. But we need to keep an eye on exactly what's happening on the macro situation, as it is having an important and relevant effect on the Bitcoin price. And if we move on to the fear and greed index, this gives us a very good indicator in terms of the sentiment that's out there. And as you can see from here, this has been oscillating quite wildly, and currently we're on 45, which equates to fear, but only last week at low levels of below 30. But since then, we've obviously gone up to 49 as well as go as low as 30 as well in between. So the sentiment is actually improving. And if we have a look at the chart here, what we're seeing is a series of higher lows being made, as you can see with these points, and higher highs. So this is a rising sentiment since February this year. So the sentiment is certainly improving, and this gives us a little bit of a hope that Bitcoin may go higher than what we're expecting. So it's not all doom and gloom out there. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.